Hi, welcome to Family Wealth Planning Partners. I'm Brian Ramsey, and this is week 2 of a 3-part series we've done around life insurance. Now, week 1 we looked at more temporary coverage or term insurance. Typically, that fits the need as term insurance. Week 2 we're going to look at you need coverage to remain intact throughout your lifetime, and that's more permanent life insurance. And then week 3 we're going to look at a hybrid product. Make sure you turn into next week because I've got a real life case scenario that I want to talk to you about that actually happened a couple of weeks ago. Now, whether you're looking for or evaluating your life insurance needs and you're looking more on a temporary basis or a permanent basis, make sure you're walking through this 3-step process. It works with both. That is step number 1. We're looking at what's the need for life insurance? What's the purpose? What are you trying to accomplish with it? It's typically one of 3 things: replacement of income, reduction of debt, or legacy planning. Now, typically when we're talking term insurance like we did last week, that really fits the bill for the first 2. You're replacing income or reduction of debt. That's where term insurance kind of comes in. The third is legacy planning. Legacy planning means lots of different things to different people. But if you need legacy planning, typically that's where we find you need coverage to be intact throughout your lifetime to cover a specific need. It could also be replacement of income and reduction of debt up to the point to when you retire. But for the most part, you're going to need the coverage to remain intact throughout your lifetime. That's where permanent insurance is a great fit. Now, there are a lot of different types of permanent insurance. There's whole life, there's variable life insurance, there's universal life insurance, there's variable universal life insurance. We're not going to get into the specifics on the types of policies and how they work, but we're going to give you 3 case scenarios where we often find where permanent insurance makes the most sense. So number 1, we had a client many years ago that wanted to leave a specific amount of money to his alma mater. Now, he wanted that to pay out no matter when he passed away, whether it was the year following he got the policy or when he was 95. He still wanted that policy to be paid to his alma mater. So we set up a permanent life insurance policy that, again, the beneficiary is his alma mater, and it stays intact no matter how long he lives, and when he passes away, those funds will be paid directly to his alma mater. That makes sense. If we had term insurance, he could easily outlive that term policy, and it just wouldn't make sense because that lump sum would not have gone back to his university or his alma mater. So number 2, we had a client that came in. It's been a couple of years ago, but prior to them coming to see us, the husband had retired from a company here in town and had a very nice pension. Well, when he selected his pension options, he chose a single life payout, meaning that pension is only going to pay as long as he's alive. If he were to pass away, that pension was going to discontinue, and his wife wouldn't receive any benefit. So they had some other assets. So what we wound up doing was we took a lump sum of money and bought a permanent life insurance policy on him. Again, a policy that's going to remain intact for his lifetime. So that in the event that he passed away, there would be a lump sum of cash that would be paid back into their other pool of money that would offset the loss of the income that he chose when he chose his pension as a single life payout. So that made a ton of sense, and we wind up putting that policy in place. The third option, which is not really used that much, but it is, if properly constructed, can be a great way to use a life insurance policy or a permanent policy as an investment vehicle. I know that sounds funny, and you're probably going to I'll probably get a lot of emails saying, no, it's not investment. No, it's not investment. I get it. However, there are certain strategies that you can put in place so that when it comes to permanent insurance, that you can use those funds that are generated inside those policies for later in life. Now, again, one of the characteristics of a permanent life insurance policy that's different than term we looked at last week is, one, you have the ability to potentially invest the assets or them have market exposure, and they grow according to the performance of the market. And number 2, there's cash value. And so the cash value is something that you do have access to at any time. There's cash value. You have access to use that money And so there's a couple different strategies that we put in place with clients to use permanent life insurance as a form of an investment vehicle. Now again, I will tell you, that's a complicated thing that we put together. It's not for everybody, but if you've got questions, make sure you give us a call and we'll walk you through that. So as a quick recap, permanent insurance is a need for coverage that remains intact throughout your lifetime. I will tell you though, if out of all the years we've been doing financial planning, financial modeling, cash flow planning, however you want to call it, and we do a need analysis for life insurance, the majority of the time, term insurance is a great fit. Very seldom do we actually run into a scenario where the client needs coverage throughout their lifetime, no matter how long they live. That's where permanent insurance comes into place. It's a great fit if you have that need, but not everybody has that need. Very, very few people actually have that need. But either way, whether you're looking at temporary coverage and term, or you're looking for a more permanent coverage, make sure you're walking through these 3 steps. It's not just a priority or something that we do. It's something every person that sells life insurance should do. And that's number 1, determine what the need is. 2, determine the amount of coverage that you need. Not everybody needs $1 million life insurance policy. Some only need a couple $100,000. So make sure you're determining the need. And then 3rd, you need to determine whether you need a temporary fix or whether you need a permanent fix. So again, I cannot stress enough that when you're evaluating life insurance, make sure you're walking through those 3 steps. If you find yourself in a position where you're trying to determine those 3 steps and you need some help, call us. Be happy. Call any member of my team. Be happy to walk you through our 3-step process, and we'll get you quotes if we determine there's a need. We'll look at either permanent or temporary need. Be happy to help. If you've got questions for us, check out the phone number that's going to pop up here on the screen. You can go to familywealthplanningpartners.com and schedule a complimentary 1-hour meeting. We can talk about any life insurance that you need. You can schedule meetings with anybody on my staff via the website as well. Just click on that 1-hour complimentary meeting and you'll see everybody's name there. You can click and schedule a meeting with any of us. So that's it for this week. That is week 2. We're talking permanent insurance. Again, if you want more information on the types of permanent insurance, call us. We can go into more detail there, but we didn't want to spend too much time on how permanent insurance actually works in the details. We wanted to more give you sort of strategy around how someone or why someone would use permanent insurance. That's it for this week. Check out next week when we are talking hybrid products, and we'll see you next week.